Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Saturday, March 11th, and this is going to be a continuation from Thursday's update video. And I'm utilizing the same chart that I left off back then. So if you have not seen that video, I would encourage you to watch that video first. Remember, you can always watch it at 1.5x speed or 1.75 or 2x speed to make the videos go a little bit quicker. I do spend some time explaining things in detail. That's just my nature. I try to make these videos really quick, but it's just hard for me as I like to explain thoroughly what I see and why I see it so that people can understand what the process is that goes through the mind of a trader or of an analyst when they're looking at price action. So I think that's a good way to help and educate people. And now that we're in this type of market, we have all the time in the world to do that. So I like to take that approach when I'm making these videos. So I do apologize if they are longer than just a regular quick update, but hopefully you find some good information from them. I do ask if you can please hit the like button, guys. I'm trying to grow my YouTube channel, and in order to do so, I need your help. When you hit the like, the more people that like it, the more it goes into the algorithms in YouTube, and the more exposure these videos get when people search for Bitcoin, Ethereum, cryptocurrencies, and things of that nature. That's why I hashtag those on the comments. I do have affiliates that I work with, and those affiliates are on the links to those affiliates are down below. One of the things I want to make sure people understand and they should use is a VPN. I also have my affiliate link for the VPN, ExpressVPN, that I use. Very important to protect yourself, guys. Not only do you get access to exchanges that are not very friendly to US residents, and you can bypass that with the VPN. But even if you don't, it's always a good security measure to have a VPN. So make sure that you have one. If you don't have one, you can use the link below. I get a free month, you get a free month, and it's a win-win for all of us. Same thing with the exchanges that I use in the HyBlock, which is the liquidation data site that I use. We both get something from it. So let's start with the video. So I'm going to do this. I'm going to start like I normally do. I start off without the indicators. I'm going to hide the indicators for now, and we're going to speak about strictly price action. So at the time of the video, if you guys remember, or if you guys just finished watching Thursday's video, we were right in here. Now I mapped out. Let me zoom out a little bit. We were talking about harmonic patterns. And what I had measured on Thursday was this harmonic move here, and we did it actually in the 12-hour time frame. So here was this harmonic move, and here was the trend line, the diagonal trend line, showing the support and the bounces off of this trend line. However, the harmonic pattern, the ending of that harmonic pattern, was right inside of this area here. It was in this area here. And I had mentioned it doesn't always hit exactly. It could be a little bit above, a little bit below, a little bit of a few percentage of margin, a buffer margin, but it actually at one point did finish completely on the line. Now, I told you guys, typically when we see our harmonic pattern, we see a bounce. Now, it doesn't normally just fall like this unless it's, you guys remember what I said? Catalyst driven, news event driven. That's not catalyst driven. That's the wrong description. It's news driven. It would be the catalyst for a move, for a continuation off of the end of harmonic pattern. Typically, we bounce, and this is the area where I was looking for a bounce. If you recall, that's why I put these notes here. Look for lower high if we bounce right in here. Why the 50%? Because it was because this harmonic pattern on this side here was a 50% move from this move here. So we mimicked that move down on this harmonic pattern, and we measured a potential move to the upside. Now that didn't happen. So let's do this. Actually, before I erase that, I want to tell you what the scenario was for the bear case. Remember, this was the scenario for the bull case. You guys recall the scenario for the bear case? right there. If we fall down, if we fall and we bleed out, this here is, and actually this line here, we mapped out on Thursday's video. So please, if you can go back to that video and refresh your memory, we talked about this video here, this support bar here being as the area of support. Now, why did we choose this one here? If you guys recall, we went to the daily. When I snapped this line, I was looking for areas of support and resistance that were, that were pretty substantial, that were hit quite often. And I told you this is, subjective. We can go a little bit higher, but this area here seems to be the one that was respected on both sides, the resistance side and the support side. Look at how beautifully this TA worked out. This isn't something that I knew we were going to fall here. I put this line based on the data that was given to me. And this is what I want to make sure I reiterate and make you understand. This, because it worked out so perfectly, doesn't mean that I have a crystal ball. It just means that when I look left, I can recognize areas that stand out to me as support and resistance based on the behavior of the price action. And this is something that will come with time. When you look at these areas, seeing these charts almost every day for the past 6 years, this will become second nature. It will become second nature much sooner than 6 years. But the more you do it, the more these areas will stand out, even without having these. So let me show you this real quick here. When you even if that line isn't there, you can almost visually see that line there, and when you chalk them out on your chart and they play out, it just strengthens this area here. I told you guys that last week. These support and resistance lines, they don't expire. Contrary, they actually get stronger with time as they're respected throughout the price action history. So now that we've landed here, now what? Okay, before we continue on the now what, let's do this. I want to erase this that wasn't validated. So we did not get the bounce off the harmonic pattern. We did dump, and we dumped because of news-driven events, which is what's going on with the banking industry. So let's go ahead and get out of that. And now we're here. Nice bounce off of here. Doesn't mean that this is it. This is the end of the bounce. It just means that even though this was news driven and it was a catalyst to drop more, the price action still likes to respect strong areas of support. And we were able to hit one of those areas, but we still have areas to the downside as support if we continue to bleed out. Now, you have to remember, today is Saturday. It's a weekend. Come Monday, there's going to be a lot more news regarding what's going on with the banks. And I think as the weekend goes by and people digest the information of what's going on with USDC, with the Silicon Valley Bank, and whatever contagion spreads through other banks, and fear spreads through the community and through the world, people will be going first thing Monday morning to their banks and start withdrawing, causing more bank runs, causing more stress on the financial system. So when that happens, obviously that has a great impact on the markets. It doesn't necessarily have to be crypto-related banks, because we're so tightly correlated with the broader markets. Those effects on the broader market could cause more downside. Now, the purpose of Bitcoin, if you guys recall when it was invented, is for a hedge to broader markets. So far, we haven't seen that become a reality just yet. However, keep this in mind, guys, and I'm not a Bitcoin maximalist. You guys know that. I just follow the price action. If anything, if anybody's going to call me a maximalist, it'll be on Ethereum, because I prefer having Ethereum over Bitcoin because of the ROI factor. Ethereum has always outperformed Bitcoin in ROI since it started. Since its inception, Bitcoin has never done better year after year against Ethereum. But I want to talk about Bitcoin and the utility of Bitcoin and why it was invented. It was supposed to be a hedge against inflation. It was to be a hedge against broader markets. And I have to admit, guys, even though Bitcoin does follow broader markets, I don't know if you guys have seen it. I follow both markets, and lately it seems that Bitcoin has been holding up much better than broader markets on their moves to the downside. Yes, we have fallen as well, but it just seems like it's not as tightly correlated as it was the year before. Maybe it's just me, but I kind of I'm starting to see a pattern emerge where Bitcoin starts being much stronger. And I think that strength might start being noticed by broader markets. And what I'm trying to get to is I'm wondering, and now I don't know, this is just speculation. This is just me thinking out loud. If those guys in the broader market sector, especially the tech sector, start seeing the strength, and through these years, they're starting to understand more and more how Bitcoin works and what Bitcoin actually is it's a store of value, they may start hedging against broader markets utilizing Bitcoin. Now, that would be a start, in my opinion, to a decoupling phase to get away from the effects of broader markets, negative effects of broader markets affecting Bitcoin. And obviously, if it affects Bitcoin, it's going to affect the crypto industry, because if Bitcoin goes up, everything else goes up. So, it's a very tightly correlated asset that we have here with Bitcoin and the rest of the market of crypto, and again, with broader markets. So my hope is that as things get worse, and I'm not hoping for it to get worse, I'm just saying if it does get worse and Bitcoin can actually start shining a light to why Bitcoin is so necessary, we may start seeing a foundation for the next catalyst, for the next bull run. Now, we have a catalyst already, which is the halvening. But besides that, I think that for Bitcoin to outperform, there's usually an underlying, besides the halvening, there's an underlying I guess I'm not sure how to really phrase it, but there's an underlying catalyst. And what I mean by that is, let me give you an example. Last bull run, what did we see a lot of on the media? What was something that was sparking people's interest? NFTs and metaverse. Everyone was talking about NFTs. I mean, you had almost every major brand talking about NFTs. Adidas, Coke, Facebook, every brand out there. Ticketmaster is issuing NFTs as tickets to go into concerts. I mean, it's all over. That fuels the interest of people going into crypto. So this next bull run, if we can get the next catalyst to fuel that bull run as a safety net, as a transparent ledger and a store of value, we could hopefully start seeing those numbers that once were a dream, as far as Bitcoin being 300,000, 500,000, $1 million. I know we all talk about that, but look, the last bull run the previous bull run we went to 20,000. This one we went to almost 70,000. There's no reason we cannot make it to $250,000, $300,000, $500,000. There's many people much smarter than me that have talked about Bitcoin becoming a $40 trillion asset. Last bull run, we hit a little over 3 trillion. So just think about that multiple. Think about the effects that will have on Bitcoin. When I first was introduced to Bitcoin was $400. When they first told me about Bitcoin, it was $400. So back then, even thinking of Bitcoin at 5,000 was a big deal. It went to $69,000. And more people are now paying a lot more attention to crypto, and it isn't a thing of to use for like Silk Road for illegal activities. It is now taken seriously by a lot of people with a lot of money. So hopefully that interest continues to grow, the utility continues to grow as far as store value, and the need for having a place to safely store your assets becomes a need for them to hold Bitcoin. Let me give you an example, guys. These banks that are collapsing, people had millions of dollars in these accounts, and they're only going to be insured for $250,000. Everything else, they could potentially lose. Can you imagine working your life and finally having, say, $10, $15 million, putting in a bank you think that this is a solid bank, the 15th largest bank in the world, in the United States, excuse me. The odds of failing, very, very slim to none. And now you're down to $250,000 secured, and the rest of it, it's up in the air. Tell me that isn't a catalyst for people to pay attention to crypto, to store the money. Yes, value does go down in Bitcoin. I'm not saying it doesn't. It went from 70,000, down to 15,400. Yes, it goes down, but we know that Bitcoin goes through cycles like everything else, and we are all, if not most, 99% of you know that there's going to be a bull run that will increase the value of the previous bull run. We will see values higher than the previous bull run. So as people understand how Bitcoin works in the cycles, I'm hoping that more people will move into Bitcoin and fueling that run for the next one. But until then, what are we looking at as far as price action? What could we expect? Well, unfortunately, when it comes to news-driven events, we really don't know. All we can do is look at areas, like I mentioned, support and resistance. So as of right now, in my view, based on experience and based on fear of what is going on in the banking sector, we could very well continue to fall. And if we fall, you need to think of this as an opportunity. Not having fear that it's falling, but an opportunity. Next opportunity is going to be at $18,400 area. This is going to be at a very important level of opportunity in here, because it is going to basically back test the neckline break of this beautiful double bottom structure. It is going to also it's going to continue to strengthen all of this area here of support, as you can see in this area here. So this would be, in my opinion, the next catalyst. Can it drop below? Obviously it can. But look, even through news-driven events, look at the way, if you guys were paying attention, this line here and this line here were on my charts for, I think, since we started this series about 3 weeks ago. These been on my chart. Now, before we broke down to here, we actually stopped right here. It's important, guys, that if you could mimic my chart, if you guys can open up another chart and just utilize that and mimic it and look at these lines, you can see the value of these here on the green, right here on the green, you'll see the value, and put those on your chart and study it. Watch it as it goes down. Does it stop here? It did. Why? Not because I said so, but because the price action dictated most of the time where that support is going to be found based on prior price action. It's exactly where it fell. It continued to fall. It hit our next area, and it's more than likely going to hit this next area. Now, we're getting to a point, guys, that we could very well start testing the bottom of this market here, of where we were, or even go down below to what I've been calling all of last year, 886, which is the 11,000, I believe, $377 area. But before we get there, guys, there's a lot that needs to happen. So I don't want to talk about that just yet. I want to take it each data point as it happens. So right now we got that hit there. If we continue to fall, I'm going to look at this data point, and I'm going to put one more data point because I think it's really important that we look just a little bit more ahead. We don't need to go all the way down to 886, 11,000, because even before then, we have a very strong confluence at 14,000. I don't think that we would go from here all the way down to $11,377. There's a lot of support. Let me map out some of the support areas. So let's go to the weekly just because it cleans up the chart a little bit better. So let's go in here. Let's go to that weekly. And the next level of interest for me would be here, would be this area here. This, I believe, would be the next area. Now, I'll explain to you why. Whenever you're looking at support from above and it's coming down, the first thing you want to do is look at the prior area of resistance. That is usually, more often than not, where price action will find that initial support. Not that it can't blow through it, but again, if you map this, if you snap this line on your chart and you study this on lower time frames, you will notice the accuracy of how well that plays out. And then you will start recognizing those areas as you're looking on your own time for areas of support. So this is the next area of support. We have this one, we have this one. And then if we break through here, obviously it's going to be the test of these lows. Now, we did a double bottom test of these lows in this area here. So you have this touch here and this touch here, which bounced off. And, it was basically the beginning structure of this double bottom W. And we went up and it was beautiful. We had a nice little run there. Now we have the opposite. I talked about this in the last video. We have a double top, which is a very bearish market structure. And remember what I said on the video. We're looking for a 786 or a completion of this double top, which started right in this here. So somewhere in here are the two areas that I'm looking at for a bounce. Now, unfortunately, these bounces do come with a typical market structure of a flag and then more downside, which isn't necessarily bad, because if we could get a 786 bounce with a flag and come back down and then back test this, it would work to our advantage as far as speeding up the bull run. And let me explain to you why. This asset class, guys, crypto, is almost $1 trillion. As much as I would want to buy it at $11,377, that type of market cap is very difficult to just throw around, to just drop all the way down and let's just come back up. Markets don't work that way. That type of money isn't thrown around. Billions of dollars are thrown around daily. Yeah, billions. We're talking about almost $1 trillion. That does not move around. Look at Apple, for instance. Apple has a great day and it does 1%, and they call that an incredible day because of what it's worth, because of the market cap. So same thing with this here. So why would it be good if we flag out and come back down here? Because that shows strength in this area here. The longer we stay up here without falling here is less likely that we're coming down, because we are running out of time. We have something unique to crypto that no other market has. We have the halvening. The halvening is a guaranteed marker that we will see another bull market. Do not believe the other accounts that tell you, we probably won't see for 5 years. They don't understand crypto. Any account that tells you that we're not going to have a bull run for the next halvening, they don't understand crypto. And do me a favor, when they tell you that, take a screenshot. Next year, when that halvening happens, I want you to put a little reminder on, let's just say May, because by May of next year, we would already have the halvening, and look at the price action and see who was correct, who understood what crypto is about, who understands the crypto market against people who are telling you that, oh no, we're not going to see another all-time high for 5 years. Let's see which one of those two understands the market better. That's all you have to do. Just take a screenshot, put yourself a reminder, and let's see how that works out. So my point is that I really would like, as much as I would like to see, 886, if we can manage to kill time and stay above this $15,600 level, we are increasing the chances of not seeing lower targets. I told you that I can't see any other crypto-related catalysts for a move that severely down. However, look what's going on with the banks, something I was completely unaware of. And it's pushing the market. Yes, it definitely is pushing the markets. But could that be enough to drop the market that much? We're still in $20,000. Could that catalyst drop another 50% off of Bitcoin? I don't think that catalyst is as strong. And again, guys, this is pure speculation. It very well could be. One of the things that I'm always saying in my videos, and I've said this many times before, we won't know the reason of why we drop, but there is always a reason to go there. Guys, I'm not a conspiracy theorist, but make no mistake, the media, the market makers use the media for their advantage to move markets. Easiest way to create fear and excitement is through the mass media. When we fall like this, believe it, market makers are cashing in on every single one of these moves, which is why when things are like this, you hear nothing but what? Bad news. When things are going up, you don't hear any bad news. It's all good news. Very little bad news, better said. And some of the bad news is completely overshadowed, and people are just full of dopamine, hopium, and you see the subsequent move in the markets. So on the downside, it works the same way. But even then, I don't know yet what other catalyst could be out there as we're running out of time for the next halving. And I've been a very big advocate of 886, and even I'm telling you that I just don't see it because we spend so much time up here. The higher that we go up, the less likely we're coming down. Not that it's impossible, but it just becomes less probable. And as an analyst, we deal in the realm of probability. And the probability is in our favor that those targets may not get hit. Now, I'm not going to map anything below here just yet because we have 1, 2, 3 very strong areas of support. And this is the weekly time frame, which increases that even more. And so I'm going to wait for this to be touched to even start talking about lower targets, because that's just too much speculation and looking too much into the future without any real bias or any real catalyst to say that we're going to fall that dramatic since we've gone up so much. Had we not gone up so much, then yes, obviously we would be in a much different position. We would be closer to this bottom here, and that obviously would lend to our favor for it to drop even further. But this move gave us what? What did it give us? What did this move give us now with all these bad times? It gave us a really nice buffer. It gave us an incredible buffer for us to have as a protection to hold this as our lows. If I were you guys, I would start dollar cost averaging on every single one of these key points. That's what I'm doing. You can do whatever you want with your money. I'm not a financial advisor. This could very well turn from here, go all the way up, or it can go here to zero and you lose everything. Bitcoin fails, you can dollar cost average all you want, and you're going to lose all of your money. So remember that there's always that possibility. If you have income, if you have a portfolio money that you can afford to lose, that does not affect your life, and you want to throw a few dollars at Bitcoin, I would suggest here. $20, $20, $20. If it drops further, It's up to you. If you see the value in Bitcoin and you believe that it's not going to go to zero, you can then lower these entries by buying it lower. But dollar cost averaging from here, I think, is a smart move because, again, this move provided us a good buffer. So the 886 target becomes less likely, not impossible, less likely. So if it becomes less likely, you want to protect yourself so that you're not chasing the next run to the upside. The next move to the upside, guys, I think is going to be it. I think the next time that we see Bitcoin break 25,000, we are going to be on the beginning of the new bull run. Put it that way. I think that would probably be the best way to describe it. Could this happen right now? Yes, it could. But I want to show you some data. I want to show you some liquidation data. And again, if you watch Thursday's video, you're really going to understand this data much better. Let's start with HyBlock. Look at the liquidations. Remember on Thursday's video, we had liquidations above 26,000 and at 25,000. Look, it's all gone. It's done. It's now lowering. Incredible heat. We have billions of dollars to be liquidated, slightly above the price action and below the price action a lot more, better said, below the price action. So to the upside, we have 20,800 for the upside liquidations. That's not very far. That's not very far from the current price action. And we have a ton more towards the bottom, all the way down to $16,150. So now we have a lot more pressure to go down for the market makers to make more money. Now look at this. This is spot heat map. So this here is leveraged contracts, derivatives, compared to spot. These are an accumulation of buy and sell liquidity, accumulative. Look at the support down here of $15,000. So you have the derivatives, intense heat down for the market makers to tap at 16,150, I believe I said. And you have you have spot saying, "Come here, baby. I'm ready to buy you at 15,000," and then down at 12,000. Again, these heat maps indicate where the liquidity is. It doesn't guarantee the price to go there. But if you look to the left and you look at the heat signatures and you look at the behavior of price action, how it gravitates to those areas, it allows you to come up with a probability scenario for getting into those areas. Looking at the way the market makers were teasing the market on here, and then they turn it all off, and then they lower it. They bring it. They keep it much lower. Look at here. 10,000 is no longer an interest to market makers. They had it intense all of 2022. We had the $10,000 pool right here. Massive liquidity. Look, right at 10,000. You see the little box that popped up? You see that yellow highlight? That shows all the orders that were the liquidity of the liquidity pool that was at $10,000. And right here on the beginning of January, they lessened that. And now look, let me see if it'll show up here. Look, we went from 500. Why won't it show? Right there. We went from 1.3 thousand Bitcoin order at 10,000 down to 475, down to 418, to nothing. And now they just barely turn it on right here. This little blimp right in here. Look, this little blimp. Today they turn it on for 439 Bitcoin order. They had turned it off completely. No interest anymore. This was the land in the sand that they had. Now they have a 5,000 Bitcoin order at $12,000. So this, again, even though there's no guarantee, at least it gives you an idea, a mindset of what big money, the market makers, are wanting the price to do. And since it plays out more often than not, I believe it's a good place to pay attention to see how this affects the price action. And you can directly see it here on the map. I mean, look at this right here. Look at this price action as it's going up here. Look at this, for instance. Let's play around with this one here. We're going up here. There's no heat here. There is no heat at 21,000. What is it? 21,600. Look, no heat at all. As it's going up, they turn the heat on here. They're pressuring it to come down. Then that's not working. It's going higher. They put more heat here, lowering it, getting it the price to come down. It's still going up. They lower it and they keep the heat at 21,400. They hold it. And then what do you know? Right into that pocket. And look at that. 1, 2, 3, 4, 5 days of just tapping into that. They turn it off and boom, it goes up. Do you see that, guys? And you can follow this on a daily basis and just watch the way they turn the heat on, the way when it comes down and it grabs it. If they wanted to go back up, they turn it off, they bring it back up. It's just amazing. Look, they put carrots above, little teasers above here. Come and get me. And look, the price action, boom, and it stays there. It doesn't go above. They keep on tapping that. They're not allowing it to go any higher. They're holding it there. And then they start teasing it to the downside. And you can see the heat popping up. And then when the heat pops up, very soon afterwards, the price action starts to shift and pivot and go towards those heat areas. Very interesting stuff, guys. If you're into this stuff, this is an incredible site. I love using it. Again, not a guarantee. I just like looking at the way the market is maneuvered into those pockets more often than not. So hopefully all that made sense, guys. Again, I'm not even going to try to make these videos really short. I want to be able to educate you guys and help you along your journey if you're trying to learn TA. This is what I like to do. This is what I do for my Discord. So like I mentioned before, guys, I have a paid Discord. It's a monthly fee, a small monthly fee. It's $125 a month. And what it does, in there's a lot of material for you to understand how this works. I do videos on a daily basis explaining my system and what I use. And it's a repetitive type of learning environment. So the more you hear it, the more you see the same indicators at work, the more likely it is for you to retain that. Just like anything else in life, guys, the more you do it, the more you hear it, the more you understand it, the more it becomes second nature. A couple of things on the chart that I want to do, guys. I want to take this time and just erase all this HyBlock data because this is no longer valid. As you can see, all that changed in our HyBlock liquidation. So for right now, we're going to erase that. I'm not going to plot new ones out. I think the environment right now is very, very fluid. A lot of stuff going on. So there's no need to put new ones at the moment. We're going to stick to what's going on with the media, how it's affecting the price action, and we're going to stick to basics, support, resistance. And as you can see, I never even turned on my EMAs. The EMAs are there at the moment. For instance, the EMAs are not giving me any direction or any areas really of support. They're basically telling me everything looks like shit because this is what I look for. When you look at the weekly time frame, you use the lower time frame EMAs like the 9 and the 30. You can see it's pointing down. That carries a lot of weight. When you go down to like the 12-hour time frame, you can really see how bearish things are. And this is just a reflection. The EMAs are a reflection of how bearish things are. Look at the way these EMAs are. Here's a 30, here's a 50, here's a 9. Look at the way they're just pointing down. I mean, straight roller coaster downhill. Nothing's really slanted. These higher time frames EMAs are going horizontals because these are the 300 and the 200. So obviously they're going to take a lot more time on a 12-hour time frame period to really start showing that weakness. But if I do this, go down to the 4-hour time frame, look at this. Now all of them have that incline. The higher time frame EMAs up on top, you can start seeing that incline starting to happen. The lower time frames are in full straight downward mode. There's a lot of things to glean from an EMA perspective, but for right now, I spent enough time on it, so I'm not going to worry about it. I'm not going to touch on it too much. The only thing I will say that I have noticed on the 4-hour time frame, in the short term, we're putting in a bullish market structure. We're putting in what I call a W. Now that W doesn't get us very far. The end of that W is going to be right here. The end of that W, in my opinion, if it plays out. If it plays out right now, there's so much catalyst in the market, negative catalyst in the market, that we may not get there. But typically, in a W pattern, in a double bottom pattern, we will see, if you measure this move, it's probably going to be like a 618, and then you'll see a continuation onto here, and that'll be the end of that move. And look at that beautiful double bottom structure. We do have resistance on the 9 EMA at the moment. In my opinion, if the price action can break above the 9 EMA and gain support, we have a much better chance of completing this W. But this would probably be a good setup for a short if you wanted to scalp with some, just some play money. But for right now, this is kind of what I'm looking at. As a matter of fact, you know what? Let me do this real quick. Let me see if this is a 618 or a 706. I'm not sure which one of the two it'll hit. Oh, it was actually a 786. It went down a little bit further. Okay, these are the three areas that I look at for that move on that double bottom, and it hit the very bottom. It bounced off the very bottom of my scale, so it went down a little bit further than I anticipated. It went out to 786. However, it did bounce off that one, and again, this is a recognizable market structure that more often than not does break up to the upside. This could also, obviously, there's always a bearish pattern to a bullish pattern. Does that make sense, guys? There's always a bearish pattern to a bullish pattern. Let me explain what I mean by that. So even though this is a bullish pattern, before it's confirmed as a bullish pattern, this is a... Do you guys know what this is? This is a bear flag. Look at this. Bear flag broke, came back, confirmed it, could continue to go down. However, the moment it breaks this neckline here, it stops being a bear flag and it continues on with that bullish structure. It works the same thing in reverse. So let me show you an example of that. Let's look at this one here. Let's look at the higher time frames. Look at higher time frames, and let's look at I'm going to hide all the indicators for right now. And looking at this was a flag pattern. Let me look at the daily. Maybe the daily we can probably see a little bit better. You have a flag pattern that broke up, but before it breaks out, it could very well turn into a double top. So a double top structure, though it's negative, before it gets there, you'll see a breakout that could possibly be a bull flag breakout until it's confirmed, obviously. Once it breaks the neckline, it's confirmed as a bear structure. Does that make sense? Hopefully that makes sense. It makes sense to me because I watch it all the time. But those are little things that I'm looking at. So for right now, I'm looking at this structure here. I'm sure you guys recognize this. Here, I'll show it to you. Even on the weekly, you can see that. Here it is. Look, there's that W. You see that? Actually, let me measure this real quick on this W here. So let's look and see how it played out. Look, very similar. You see this? That nice bullet, that same structure we have now. If you take the swing low to the swing high, we bounced off close to 786 and we went up. This one, however, we did go past the left side of that W and we kept on going. We talked about that on Thursday as well. But now we have this same type of pattern on a 4-hour time frame. Here it is again. Let's, on a smaller time frame, same market structure, very similar area for bounce. We haven't confirmed it until we pass the neckline, but very well could turn into an opportunity for a scalp long into a scalp short for more downside. If I was a betting man, I'm going to say Monday is not going to be pretty. Monday, I think it's going to be worse as that fear is building through the weekend. So if you see this happening, again, maybe a good short up, maybe a good long scalp opportunity into a good long, still good short scalp opportunity for the opening of Monday. We don't know. It's very volatile, very dangerous to play at the moment. In my opinion, guys, it's better to stay away. But here's how you learn. Why don't you paper trade it? Why don't you paper trade a scalp long into this box, see how it plays out, and then have a paper trade ready for this area here for a short to the downside. If some of you guys are new to understand what a paper trade is, it basically means you take a piece of paper or open up a notepad on your computer and say, okay, I'm gonna take a trade at $20,069, and I'm going to exit that trade at, play it safe, the bottom of this box, 21,653. That's all you're gonna write. That's it. That's your paper trade right there. And what you're gonna do is you're gonna set an alert that the moment it hits that, your paper trade is complete. You got in here. Your exit was here. Your exit hit. Boom. A successful paper trade. If it's wrong, you don't lose anything. If it's right, you get to understand why it was right. That's the important part, guys. When things go right and wrong, it's not about being right and wrong. It's about understanding why you were right and why you were wrong. That's how you're going to grow as a trader, because the whys are usually going to be very similar. So, for instance, the why on this market structure is, okay, well, this is a recognizable bullish market structure, and that's why it played out. The not is because we didn't confirm the neckline. We did have a bear flag. We have a breakdown off of this bear flag with a back test and further downside. So there's always a reason for it. Here's another paper trade you can take. Instead of taking it right here, confirm it off the neckline. If we break above the neckline here, that's still a nice scalp trade. Again, it's a paper trade. Scalp normally is, 0.5% to 2.5%. That's usually what a scalp is. What would this be? Oh, this is a little bit more than a scalp, but hey, you know what? This is the weekend. We have some time, and this is a 4.5% scalp. It's scalp. Usually, so percentage are usually between 0.5%, depending on your size of your bag. Obviously, if you have a big bag, 0.5% is going to be a significant amount of profit. 0.5% to 2.5% is usually what I call a scalp. Also, a time frame could be considered a scalp instead of a percentage. So, for instance, you see an incredible setup, but you just want to play it for just that small move to the upside, and or even a big move to the upside, and you believe it's going to happen really quick. Well, that can be a scalp too. You can do a 10% scalp because it moves very quickly. Say it does that within an hour or two. You're playing a shitcoin. Very unlikely it's going to happen on a 4-hour time frame on Bitcoin. But if you're playing an altcoin with a very low cap, a scalp can happen in a matter of 30 minutes. It can go up 10% and then before crashing back down. Many of us have seen that before. That can be a scalp trade. Just because it went 10% doesn't mean it's not a scalp trade. If it happened within a very short period of time, personally, I consider that a scalp trade. I may be wrong technically as far as the true definition of a scalp trade, but to me, that's a scalp trade. 0.5 point to 2.5 points, or a quick move and a quick move up that gets me that in and out. Okay, I'm done, but I got a 10%. It's still the time frame. Still, I consider it a scalp trade. All right, guys, I think I'm going to end it here. I'm almost an hour in. I think I covered everything I wanted to cover as far as the HyBlock market, the sentiment, the reasons behind it, what to expect. If you like this information, guys, please hit the like button. Again, I have a paid Discord group. If you want to become a member and understand how I read these markets, what I look for these markets, I have a very large community. I have over 300 people in that community that are, a lot of those are very active people that are helping you understand also how they look at the market, what they look at the market, and we all have our strength and weaknesses. Many people do research on different topics, different areas of the markets, NFTs, metaverse, DeFi. They share all that information with you guys. If you think that's something that interests you, give us a try. If not, no worries. Like I said, I'm trying to grow my YouTube channel. I'm going to be making more of these videos every few days, 2 to 3 days. Sooner, if something happens in the market that needs my attention, I will make these in more frequently. But for now, I hope you enjoyed this information, and we will update. I will leave this on the chart. Actually, let me erase this because this was all just a teaching. But let's do this on the 4-hour time frame. We're going to leave this here, and let's do this. Let's leave this so we can talk about this on the next update. Did we complete the W, or did we confirm? Was this a back test of a breakdown? So let's do this here. I'm going to put an arrow here. Actually, put an arrow put an arrow here. And we're going to do this. We're going to put some notes on here just as a reminder. Did we bear break or confirm the W? All right, perfect. So that this way on whatever day I do the update, whether it be Monday or Tuesday, we'll start with this here. Which one of these two paper trades worked out? The W or the bear flag to the downside? And then at least you understand what made me think that a downside move to the downside off of a market structure, what made me think to the downside. Now, yes, I know guys are going to be like, oh yeah, well, it's going to either go up or it can go down. It's a little bit more than that, guys. Yes, the markets can either go up or they can go down, but recognizing these market structures and understanding that these market structures usually play in one direction more than the other based on the market structure is my point. This to me is a very weak bear flag compared to the W completion. So if I had to put a percentage to it, for instance, if I see this market structure, I'm gonna lean 70% to the upside versus 30% that this is a bear flag, because this is, to me, is not a very convincing breakout. I hope that makes better sense. And knowing and understanding that when you see a market structure will help you understand where to place your bets. Everyone have a really good weekend. Be safe out there. Protect your capital. And we'll see you in the next one.